I've been saying all year that I thought we were in a recession. And that's why I was so confident that Trump was going to win, because I thought that in a recession, the voters would not want 4 more years by voting for Kamala. But, Powell at the press conference, again, talked about how remarkable the U.S. economy is. They keep talking about this great economy, this strong labor market, ignoring the results of the last election, as if, economy didn't impact these voters, even though the voters told the exit poll guys that they were voting for Trump because the economy was no good. So there's overwhelming evidence, plus with all the recent downward revisions to the previously reported non-farm payroll numbers, that the economy is not good. Yet the Fed is still clinging to the illusion that it is. But yeah, at some point we may find out that we've been in recession for the entire year. And then the Fed's going to have even more egg on its face for having talked about how great the economy was and not even realizing that it was actually in a recession. We're seeing a little glimpse of what's to come with respect to Donald Trump and the Republicans, or the DOGE, fake Department of Government Efficiency, when you're seeing this breakdown right now in the ranks of the Republican Party. You have a lot of Republicans who want more debt, more spending. In fact, you had the overwhelming majority of Republicans just vote to pass the Social Security Fairness Act, which is certainly not fair to taxpayers because it increases benefits dramatically for civil service workers. It's going to add at least $20 billion a year to the debt. But this new continuing resolution has another $110 billion in brand new spending on top of their pay raise that they get for themselves. But it also extends the suspension of the debt ceiling. We don't even raise the debt ceiling anymore. We just suspend it so that the sky's the limit over the next 2 years. And you have Trump and Musk encouraging Republicans who don't want to sign a 2-year extension because they want to use the debt ceiling as leverage to exact some spending cuts out of Congress. And Trump is saying, no, let's suspend it. In fact, now Donald Trump is talking about abolishing the debt ceiling completely. So, for all the talk about wanting to do something about the debt, the ceiling is all we got. Not that it's even real because they keep raising it. But if we ran up over 36 trillion of debt with a ceiling, imagine how much more debt we're going to run up without one. My point is, it doesn't really make a difference who gets the job, because the job of reducing government spending is the one that's not going to get done. The deficits are just going to keep on rising. We're not going to make any meaningful cuts. We may not make any cuts to government spending, but whatever trivial cuts might be made are going to pale in comparison to just the normal increase that we're going to get in government spending. And so anybody who believes we're going to be starting down a new fiscally responsible path, no, that's just a pure fantasy. I mean, there could be some small cuts which would be offsetting the increase in spending, but I expect government spending to rise every year that Trump is president, just the way it rose every year he was president the first time. It began before COVID, and the deficits went up every year that Trump was president, and I expect the same thing will happen again this time. I look for the debts to be larger in each year than it was in the previous. That's the problem, because when they do matter, that's all that matters. It's kind of like jumping off the top of the Empire State Building and on the way down say, well, there's no problem. So far, so good, because, you haven't hit the pavement yet. But once you jump off the top of the building, hitting the pavement is the inevitable outcome. And so we are heading to a debt crisis. We're not doing anything to alter the trajectory that we're on. The underlying economy is very weak. The voters know that. That's why, a lot of people voted for Trump, because of their frustration over their circumstances. And a lot of that is the result of the debt. It's the result of capital that should be going to growing the economy, and instead it's being diverted to growing the government. And so we're already poorer because so much of our capital is being misdirected from productive uses to government spending. It's just that people haven't necessarily connected the dots between the government spending and the fact that the economy is not as good as it otherwise would be in the absence of that spending. But we haven't had the crisis yet where the government can't sell the bonds, bond prices crash, interest rates skyrocket, the Fed, just really cranks up the presses, inflation goes through the roof, we get a dollar crisis, a sovereign debt crisis. That hasn't happened yet, but it will. It's only a question of when. It's a huge part of the GDP, but that's not the real economy. That's just measuring the money we're spending. But in order to address this problem, in order to have more resources available to fund investment in the private sector, we need to take those resources away from government and free them back up. So in the process of doing that, we're going to have a severe recession because government spending is going to have to come down dramatically. Government employment is going to have to come down. So a lot of government workers are going to have to be laid off. And a lot of people who are now getting checks from the government, not just government employees, but people on Social Security, Medicare, whoever gets government benefits, their benefits are going to have to be reduced. And therefore, their spending is going to have to be commensurately reduced. So that's going to have a big impact on GDP. You're going to see a huge contraction. Now, in the long run, that's productive. That's constructive pain. That's what we need to get back on the right track. But because getting back on the right track necessitates that short-term pain, politicians don't want any part of it. That's not how they get reelected, by telling people they got to suck it up and in the long run, it'll be worth it. Politicians want instant gratification to the voter. They want to tell the voter, I'm going to make your life better right now. Not you have to suffer to have a better life in the future. I will give you that better life right now, rather than allowing the economy to correct the imbalances that is undermining it. They just keep blowing air in the bubble, and they just hope it doesn't pop until after the next election. Tariffs are just another way for the government to tax the American people. They're not a way to tax China or Canada or Mexico. Americans pay the tariffs, whenever they buy an imported product, are imported. And so we'll be paying a tax on all those products. The only way to avoid the tariff is not to buy the product. Now, that either means you just go without a product that you otherwise wanted, or you buy some U.S. alternative that maybe isn't as good, maybe isn't as inexpensive as what you were buying from China, but that's all you can afford now because the Chinese product is too expensive. So you buy an American product, but you're still paying more for that U.S. product than you were paying for the Chinese product. So Americans are just going to pay higher prices as a result of the tariffs. Some of that money will be collected by the U.S. government and some of it won't. But they're not going to make the economy stronger. They're not going to revitalize American manufacturing any more than they did the first time that Trump imposed tariffs. I mean, the trade deficit was bigger when Trump left office than when he got there, despite the tariffs. And the Biden administration has left most of those tariffs on, and the trade deficit is worse now than it was when Biden took office. We have a record high. So we haven't made any progress. In fact, we just got earlier this week, they announced the current account deficit for the most recent quarter, and it was like $308 billion, all-time record high. We've never had a bigger current account deficit in a single quarter than the one we just had. So a lot of that is because of our trade deficit, but the rest of it is the net investment deficit. But we're hemorrhaging red ink as a country, and so I don't think the tariffs are going to turn that around. If you want to say that Trump is punishing Americans, he's either punishing them by saying you have to pay higher prices, or you have to give up these goods. You can't buy them anymore because you can't afford them. Now, are we punishing the Chinese? Are we punishing, the Mexicans? Well, we're punishing some, but we're rewarding others. So if you're a Chinese company and that you were selling products to Americans, and now you can't sell as many products to Americans because Americans can't afford them anymore, that business loses out on something. But now what does that business do with the goods that it's not selling to Americans? Well, it's going to sell those goods for a little bit less to somebody else. So the company is not going to lose out on the sales. It's going to lose out on some of the profits because it's going to have to accept the next best offer, right? Americans were giving the best offer, but obviously there's somebody else who would have paid a little less, but didn't get it because, the Americans outbid them. So the Chinese companies will end up selling the products to people in other countries or people in China. Maybe the Chinese will buy the products at a lower price than what America had paid. So the Chinese consumer is the winner, or whoever else gets the products that the Americans can no longer afford. So they're going to be winners from the tariffs. They're just not going to be Americans. Now, to the extent that you're an American company that competes with a Chinese company and you make something similar and you end up selling more of your goods at a higher price than you were before when you had the foreign competition, then yeah, there could be some American companies that win too, but at the expense of a lot more Americans who lose. Obviously, the government could be a winner, the U.S. government, because if they collect extra tax revenue, right, they win. They've got more of our money. But that's not the kind of victory that most people want. They don't want to just get the government to have more money. They want to keep more of their own money. Yeah, it did. It finally, that was the biggest losing streak since 1974. It would have been interesting if we could have been down again yesterday. We actually were only up like a couple of points. We barely went positive. The Dow was up about 400 points at its peak, but it gave up, all those gains. And for now, as of right now, the Dow is rallying today. But I don't think the market's out of the woods, because I think it was a real eye opener what the Fed said, I think, for a lot of people. And I think even though the Fed cut rates, it really tightened monetary policy. It let people know that fewer rate cuts are coming, and they may not even come at all. We may have to hike rates, because not only is inflation higher than we expected it to be, but it's actually heading in the wrong direction. And that's something I've been talking about all year, as everybody's been talking about how, we're on this glide path to 2%. I've been pointing out that I don't think we're going to hit 2%, because we've kind of run into an impasse around 3%. And that's where we've been building a base, and we're going to launch much higher from that base. So I think next year, you're going to see much higher inflation numbers. But I also think we're going to have much weaker economic numbers. So I think it's going to be stagflation, which is the one thing, Powell was asked at a press conference, what's the Fed's plans for stagflation? And he kind of laughed and he said, well, our plan is we just hope we don't have it, because they don't really have a plan. So all they can do is hope that they don't get the one thing that they're not prepared for. But, Murphy has a law, anything that can go wrong will, and we're going to have stagflation despite the fact that the Fed is hoping to avoid it. I think gold's going to continue its uptrend. I mean, it's been trending up, since the beginning of the century or the millennium. It's been outperforming stocks over that time period. I expect that to continue for all the reasons that the trend is there. We have pulled back. I mean, right now we're around 2,630 or so, 2,620. At our peak before the election, gold almost hit $2,800 an ounce. Didn't quite get there. But, peak to trough, gold pulled back about 7%, which is not, that big considering how much it had gone up. It was up well over 30% on the year. The big decline was in the mining stocks, which actually turned negative on the year. I mean, most mining stocks are now down on the year, even though gold itself is up around 26, 27% year to date. The gold stocks are down. I mean, from their peaks, the big gold stocks fell about 35%, with gold down 7%. So that's 7 times the decline, which is ridiculous. And big companies like Newmont and Barrick are negative on the year. They're down in 2024, even though gold is up close to 30% during this year. And so that just shows you how negative the sentiment is on gold, that people aren't willing to buy these stocks, that they're trading for less than 12 times earnings with a market multiple, PE of more than double that. So you've got all kinds of crazy enthusiasm for tech stocks and cryptocurrencies, and really irrational pessimism regarding gold. That shows you where the money is going to be made in the years ahead. It's going to be made by the people who go against the crowd and buy the gold, and more importantly, buy gold mining stocks, and people who sell these overpriced tech stocks and basically worthless cryptocurrencies, which would include Bitcoin. I'm just following the same plan that I've had. It's been a rough road because they keep kicking the can down that road, and so extending that day of reckoning into the future. But I'm confident that I've got it right as far as what's going to happen, even if it's taken longer than I thought before it happens. But I continue to own gold, silver, the miners, resources, foreign stocks, emerging markets. I continue to be out of the US dollar, even though on paper, as of right now, those have not been the winning trades. The best trades have been long US stocks, particularly long tech stocks, the Magnificent Seven, long AI, long crypto, long Bitcoin. I think ultimately the people who are in those positions, if they don't get out of them, which most people by definition can't, so they're going to end up with huge losses at the end of the day. And I think that I'm going to end up with big gains, even though it's going to take longer to get there. It's like the hare and the tortoise, right? The Bitcoin crowd has got a big lead right now, but at the end of the day, I think I'm going to cross the finish line and they're going to die of exhaustion or whatever, but they're not going to make it. Well, it depends. If the dollar crashes too, then, you'll have gold going up. But if we have a real crash, probably everything's going to go down. But the question is, how long will it stay down? Because the way the Fed reacts to a crash is prints a lot more money. I don't know that we're going to have a 1987 style crash, right, where the market drops 20% in one day. I mean, we were down 1,100 points yesterday on the Dow, but that's only 2.5%. That the biggest loser was the Russell 2000 was down 4%. These are not crashes like a 1929 or 1987. We may get one because the market is more overvalued now than it was, in 1929 or 1987. So, we're vulnerable for a crash, but we may not get one because of the dynamics of the central banks and the Fed in particular as to what they do to mitigate a crash. But what they do is just create inflation. So it's not like we get it for nothing. Well, the crack up boom is really when you have hyperinflation. We may have that. We'll see. I hope that's the worst case scenario. I mean, hopefully we don't get that.